With that, it's right at 12. And so I'd like to welcome everybody to our Friday, our ninth Family Business Friday Zoom at noon program. We've had some amazing speakers as we do now. And Tony Russo, who's one of the sponsors, is part of this. As always, I want to kind of say a little bit about who the Rothman Institute is, where our mission is to research, promote, and support entrepreneurship with a special focus on family and veteran businesses. We're part of Fairleigh Dickinson University. We wouldn't exist without our sponsors, TD Charitable Foundation, Provident Bank, Sun Trust, and CIA&J. Some of the programs that we have for 30 years, we've been around 30 years, so we have student entrepreneurship programs. I teach a course called Family Business Management. I'm actually teaching a course this summer on innovation and design thinking. We have a Family Business Alliance with a number of family businesses to really help them grow. We have our Family Business Awards. We'll have our 28th this year. We're looking for nominations. SobelCo has been a big partner in this, and so if you know of a family business or you are a family business, send us some nominations at rothman@fdu.edu. We have a program that just finished this week. For this session, we're going to have a national program in the summer called Veterans Launching Ventures. So veterans who have business ideas, we take them through a business planning process to help their businesses be successful. And we've had, for the last 5 years, a wonderful small business series. So we also have established something called Family Business Week. You probably haven't heard much about this, but it will be a big deal. The 4th week in October, we're calling it Family Business Week. And our idea is to have people identify and celebrate a family business that week. That occurs the same time as our Family Business Awards. But this year, because we have a big presidential election, we're not taking sides. We're just saying vote family. And especially in this crisis, we're encouraging everybody to find small businesses, support small businesses, buy from small businesses, and if they're family businesses, all the better. Also, there are a lot of, this will be on our YouTube channel. We have a lot of great information for those who are looking for leadership information during the crisis. Obviously, our Family Business Friday call. And we also have a small business poll. There are a number of polls out there. We're really trying to grow this poll to more than 1,000 small businesses. It's done by the FDU Polling, a really a nationally known polling group. We really want to hear the challenges of small businesses so that we can really work with Tony and others to really get that word out. So this crisis that has brought us all together, we all know about. I like to really talk about, this is a slide that I've shown before, but I think it's important because the 2000, 2009, 2010, we know that crisis, it was horrible for many businesses, but there was only, and I say only, 700,000 people who are unemployed. Whereas you look at the crisis now, which is the latest unemployment claims that I saw today, are 38.6 million initial jobless claims. Unbelievable. 700,000 was the record. And obviously, as we'll talk about, the reason is because small business employs America. And this is the final chart where you really see almost 70% of the businesses are under 100 employees. Most of those have no employees. About 20% are under 500, and you can see where the small businesses fall. Well, I'm excited to introduce some friends of the firm, Alan Sobel, who's the managing member of SobelCo, and Mike LaForge, who is a member of SobelCo. They have a presentation, and as I said, we're open for questions. Please send them through the chat box, and I'll stop my sharing, and then you can share.
Okay.
Alan, Michael, welcome.
Thank you.
Thanks, Dale. Let me see if I can get my screen up here and do this the right way. You guys see my screen?
Yep.
Mm-hmm.
Okay, great, perfect. So Dale, thank you very much, and Tony, thanks for Commerce and Industry's support of the Rothman Institute and Family Business Forum. Like you, we are very much committed to the entrepreneurial family business, and it's such an important engine in our economic community here in New Jersey, but throughout the country, but especially here with New Jersey. And I do know that as opposed to perhaps many large corporations that have resources and support mechanisms within the hierarchy of their corporate elements, the family business relies on family and advisors to get them through these very, very difficult times. And I empathize and I appreciate how stressful this is for everybody. And so I applaud all of you for the efforts that you're making in keeping your companies vibrant. And I hope that we can just briefly share with you some of our own thoughts in that regard. But as we move forward, most importantly, answer any questions and discuss topics that are relevant to you. So Mike and I are going to go through, we have a PowerPoint presentation that's far longer than we intend to cover. We're going to really just fly through some very high level points here. And then, through Dale's and facilitation, we'll hope to address some of the questions along with Tony that you may have. So, with that, I got to get my thing to advance. Okay, there we go. So what we've been asked to cover today is basically financial modeling, both income modeling and balance sheet modeling, but also cash flow modeling. The hottest topic that is out there and has been out there for since the CARES Act and even prior to that everybody's talking about is the Paycheck Protection Program. And so you're fortunate in that Mike is kind of an expert in this area. I know enough to be dangerous, and we'd be happy to address your questions in that regard. Because of the PPP and the CARES Act did have some various different tax provisions in it that a lot of people are not paying attention to that are quite advantageous to business owners that we certainly will touch upon, but more importantly, answer any questions you may have. And then I think we can't lose sight of the fact that while all this is financial, there's a human aspect to everything that's being done in this crisis. And so we're going to talk very briefly about strategy and tactical types of things and how you might work through that. And then again, be available for questions that you may have in that regard. So Dale kind of laid out very, very well what's really happening here in this crisis. And we're all experiencing and seeing it. And, it's led by the shelter in place provisions that every state put in. And it's led by, not led by, but it's the cause of, the result of that is this unprecedented unemployment levels, which is, just devastating to our economy. It's devastating to many of your businesses. And then what overshadows all of this is just the uncertainties of what the future will bring. I know we're all starting to get back to work slowly, and some of these provisions, these restrictions are being lifted. But, if you read these reports, we just don't know what's next. Have the numbers been going down because we've been social distancing, or is this a trend that will continue? And if the trend goes the other way, what's the next wave of the shutdown? So that uncertainty makes it particularly challenging for all of us that are managing businesses on what steps we take and what we need to do.
Yeah, Alan, as an example on that, as businesses are going back and opening up shop and bringing in employees, you just read in the paper yesterday that Ford was all set to gear up and start running their plants to continue to manufacture, or to get started manufacturing the F-150 pickups, and they had to shut their plant down because they had one of their workers show up who had the virus. So, like Alan said, the uncertainty is incredible because you don't know when you can start. You don't know when you're going to have to stop and then restart all over again. So it's certainly going to be a challenge, going forward.
No question, Mike. And then the uncertainty of how it impacts your customers and your supply chain, and we can keep and your employees, right? I mean, it's just all along the way. And we don't want to be negative and dire here, but that's just the reality on the ground here. So we're all facing that uncertainty. And so when it comes to financial modeling, as you look through your family business, and we get a lot of questions on this from our clients, and we're talking to our clients, like, how do I predict any of this? Like, how can I possibly make predictions when it comes to the future of my business when I don't know what tomorrow is going to bring? And we recognize that it's very difficult. And so what we've done here is we think that you should take a look at your start with your income statement, your cash flows. How are you driving your business? And how can you forecast what your revenue is going to look like? Unfortunately, we've had a little bit of probably the worst behind us right now, in the sense of like what's happened over the last couple of weeks. we've been working remotely now for 9 weeks as a firm. So we can get a pretty decent idea of how our workflow is going to work. I suspect that many of your businesses are starting to get sort of a sense of what's going on there. So you have to forecast your revenues. You have to forecast what your impact's going to be from a supply chain point of view. Are you going to buy more stuff sooner because you can't rely on the supply chain? Or are you going to be able to rely on that supply chain and perhaps delay some of your purchases and preserve cash flow so that you can, but still meet the demands of what your clients are looking to do? Rebudgeting of selling and general administrative expenses, particularly things like travel and entertainment. Those are areas where rebudgeting needs to be done because nobody's traveling anywhere. I don't have one client that is not under a no travel policy. And, I guess the good news to that is there's no spending on airfare. There's no spending on hotels. There's no spending on T&E. The bad news to that is there are businesses and industries that are so dependent upon that they're not receiving those revenues in the same place. And then there are other things that you need to decide about in that area, what you may defer or put off in terms of expenditures, or perhaps make the difficult decisions about layoffs and furloughs and reduction in compensation. All of those elements need to go into that financial forecasting. And then, of course, taxes may play into your cash flow. If you're making money, you got to remember you're going to have to pay our partners in New Jersey and in the federal government, somewhere in the neighborhood of about 40% of what those profits are going to be. If you're losing money, there are opportunities to potentially go back and claim those losses and recover some money that you've paid previously to free up cash flow. So that's something else to be considered in your modeling. On the balance sheets.
And also in the modeling, I think that what we've learned, not only by talking with our clients, but also learned just on our own, because, SobelCo is a business, is you have to be ready to pivot. You have to be able to react a little bit more quickly. And sometimes, I don't want to say a little bit more dangerously, but taking a little bit more risk from the standpoint of what the next step are. When I say risk, it might be, how you're investing or how you're keeping employees that maybe, maybe should be furloughed only. But again, the risk of letting these people go and then not having the ability to bring them back in when business gets back up. I had a conversation last night with somebody, and they are struggling with decisions because they're in the travel industry. So you can imagine what they're going through. And they're struggling with what to do with employees from the standpoint of furloughing them. And their fear is that they could be furloughing 150 years of experience. And then what happens if those years of experience aren't able to come back into the fold when things get geared up? So, our advice has continued to be, you can't have you got a plan, but the plan can change tomorrow. But what you need to at least do is address all these what ifs, and maybe you're not going to have a solid plan behind it, but at least you have some thought to it. In other words, at least you have an idea as to what direction or how you're going to pivot, whether or not you're going to go left, whether or not you're going to go right, or whether or not you're going to stay still for a little bit.
Yeah, Mike, good points, and thanks for that. And I couldn't agree more. And those decisions are gut-wrenching because, particularly in a family business, even though they may not be your bloodline, the people that you work with every single day and side by side every day are like family. And so I know that each of you do not, and we don't either, take these decisions very lightly. It's not, kind of check the box type decisions. We're impacting people's lives. And I know that that's very difficult. So in addition to sort of the P&L, the income statement and the cash flows, we also need to think about what the impact and where we are on our balance sheet. How does that create liquidity for us? Because liquidity is key. In these times, that's what really is important, is the access to cash. Because as things slow up, you still want to have bills to pay, and you have still obligations you need to take care of, and having that liquidity will help you do that. So, you need to assess your customer terms. Or, you may have 30-day terms, but your customers are now going to pay you in 45, 60, perhaps even in some cases 90 days. Some of them may be looking for some discounts on their receivable balances that you need to consider in there. On the inventory side, as I mentioned previously, you need to figure out how to manage that inventory. You may have had in the past an inventory turn of say 3 or 4 times a year. Now you may need to kind of get that to 5 and 6 times in order to manage your cash level better. On the property and equipment side, is there excess property and equipment that you can sell that you're really not benefiting from that would create some liquidity for you? Or equally important, did you have capital improvement plans that you might want to defer because right now is not the time to be undertaking a large capital expenditure? If you notice, this is kind of working down the balance sheet here. If you go next to your vendor terms, that's like the accounts payable area. What can you do to lean on your vendors a little bit to get the same terms that your customers are asking you? Can you get longer terms from your vendors? Can you get discounts potentially for paying quicker, which would create more liquidity in the long run, even though in the short run, it's utilizing cash? Just keep in mind that has a cascade effect. Just like when your customers come to you and ask for relief, when you go to your vendors and ask for relief, that's hurting them in some way. And so most of our clients, I think most of you view your vendors as strategic partners. And so, don't take advantage of situations is our advice. Do what you need to do under circumstances, but know that if you take advantage of them, the next time you come to the well, they might not be there for you. So treat them like a partner in your business and treat them with the respect that they deserve.
And I don't know,
Yep.
Alan, let me just interject something. I don't know what other people have been experiencing through the last 8 or 9 weeks from the standpoint of vendors and also customers, but the level of cooperation and the level of understanding among the groups is, in my mind, has been incredible. Everybody knows that this is a common disaster, if you want to term it that way. It's not regionalized like 9/11 was or Sandy. When I say 9/11 was, I mean, it was somewhat regionalized from the standpoint of the impact on the New York, New Jersey metropolitan area and Washington, D.C. But it's national. And the cooperation that I've seen amongst all these groups has been kind of amazing. It's actually been very, very good because people are understanding, because they're feeling what the other side is expressing to them as the struggles. So we'll keep our fingers crossed that cooperation continues to go forward. And we also encourage our clients and we encourage everybody to, try to continue as best they can with this level of cooperation, because I think it does make this a little bit easier to deal with.
Agreed. Just real quickly here on the long-term and short-term debt, evaluate your situation currently. Do you have debt coming due? Can you refinance, your debt in a way to extend out your terms especially on the long-term piece of things? PPP, the protection program, is certainly, if you haven't applied for it already, most have, and there is some availability left. I encourage you to do that, but that is also a great way to create liquidity, and in fact, will help your businesses because of the forgiveness portion. And then last but not least is capital. And what I really want to say here is that, this is your money, right? This is the money that you might invest back in your business. And most business owners that I know have been very fortunate over the years to be able to fulfill a whole lot of dreams and aspirations for themselves and their families through the family business. And they've taken out money. And while they put money in initially, they haven't necessarily had to recapitalize the business from time to time. You're going to be faced with a decision potentially where you may need to put some money into your business. And I know that's a difficult thing to do because you don't want to put that at risk. But having said that, if you've got a strong and a solid business, that's a fair decision to make if you have outside capital to potentially put that back into the business, and or in a sort of a backdoor way, potentially cut back significantly on your own compensation as a way of putting capital into the business. So I think these are all the things that you might want to consider. Just one other thing here that's important. Because it's difficult to predict the future, we believe very strongly in the concept of a 13-week cash flow model. 13 weeks is basically a little over 2 months, 2.5 months, maybe almost 3 months. And yeah, it's 3 months. Thanks, Mike. Mike knows I'm terrible with numbers. And that doesn't sound good coming from an accountant, but it's true. I'm more logic-based.
It's a quarter. It's a quarter.
But anyways, it's basically 1 quarter's worth of cash flow. And it should be reasonably easy to predict what's going on in the quarter, because, it's sort of taking about maybe a third to a half of what's been already done. From a cash flow point of view, sales that have already been made, you know what the terms are, the purchases that have already been made, you know what you need to pay, you know what your payroll is going to look like. And so it's a little bit easier to predict 13 weeks of cash flow. And so we strongly recommend that's what you do. You can blow it out beyond that, but it's really those 13 weeks that are most relevant.
We've noticed that banks have been asking some clients to provide them with 13-week cash flow spreadsheets, just so the bank understands where there might be areas where additional or expanded lendings are there. So if your bank does approach you in that area, it's not the worst thing to do, because they will have your forecast and that type of stuff ready to go in case you do have to dip into that marketplace to get additional funds.
Great advice.
So I'm going to fly through here. We'll take any questions you want on PPP as they come up. Just real quickly on the tax changes, there's some depreciation changes that might be helpful to your business. There were limitations on interest deductions. That's been changed. There's probably the one that's most widely applicable is you can defer the payment of Social Security taxes for the balance of the year or until you receive forgiveness on your PPP loan. That could generate some additional cash flow for you in the short term. And then there's also some retirement plan changes that you might want to be mindful of. Again, we'll be happy to address any of these as we go along. And then, Mike is going to talk to you a little bit about some management and strategy issues, and then we'll open it up to Dale and Tony.
Perfect.
Yeah, Alan, I just want to go back to the one thing, because I think it's pretty important on the tax changes, because a lot of the family businesses and everybody's been focusing so much on the Paycheck Protection Program. A lot of these things that are available from a tax standpoint have basically been a little bit overlooked and pushed aside a bit, especially things regarding the carrybacks and carry forwards. There was a lot of things that were taken off the tax plate back when we had the act back in 2017 that have been reestablished. One of them is the interest limitations have been lifted, the ability to carry back losses and carry forward losses, which again was gone as of 2018, but now it's back. And then the other one that's on the top of that list, many of our small business clients and many of the family businesses do operate out of leased facilities. So what happens there is that that was actually a technical correction from the 2017 Act, but it allows you now to depreciate improvements, leasehold improvements over a 15-year period instead of a 39-year period, and allows you to go back and do that for 2018, even if you've gone and filed your tax return. So these things are there's pretty good stuff, I think, up and down the line here. You do get the sense that the hands are out there to help. We just got to make sure that you're taking advantage of those things. Alan talked about management and strategy and so on, and I'm not naive to think that the people on this call and people in family businesses aren't on top of things within their business. I mean, they know their suppliers, they know their customers, they know things much more than Alan or I could ever share. In that regard. But one of the things that I think that is just a little bit of a change in pace is understanding the enormity of this thing. Like I said before, struggles in the past were localized to an industry or localized to a geographical area. This is everywhere. This is affecting small business, big business, and so on and so forth. And I think people have to look at it that way. And like I said before, maybe you're not going to be able to have a game plan that's going to fix every situation, but I do think that you have to at least think about it and have something formulated in your mind from the standpoint of how reaching this crisis is. I'll give you an example. You may have a business that's a wholesale distributor, but as you're formulating your plan and trying to figure out what you're going to do and strategies, it's not just you and your customers. It's your manufacturers that are bringing the product or getting the product into your warehouse. It's now going to your customers, which might be retailers, and it's not, then your retailers who have to turn around and sell it to the ultimate consumers. So again, you're dealing with the struggles of all, in that particular case, all four of those areas. You know, again, manufacturer, distribution, retail, sale, and then consumer in this. And like I said, you can't have a plan to cover every single item that may go astray. You can't have a plan to figure out, you know, whether or not there's going to be, the retail sale and so on and so forth. But I think what you need to do is you need to at least understand that everything is going to be affected, right from the standpoint of the goods going to your manufacturer, for that standpoint. You know, a lot of family business, a lot of clients, they import products from China. And again, you know, you have issues there from the standpoint of, you know, the cargo coming in and how it's going to get to the port and how it's going to get US. So like I said, I think what happens there is that the whole thought process is going to have to change. And it's going to have to, go into a lot more detail that you never would have even considered. And like I said, it's going to be very difficult for you to come up with solid plans for each one. You're not going to be able to go in there and have this type of game plan that you're used to having. But it's going to have to be something that's adaptable. It's going to have to be something where, you know, as you're taking, hits and so on, that you know how you're going to, you know, deflect them or get up off the canvas to go to the next round. I wish I could provide you with this wonderful vision that's going to come about, you know, what the next 12 months are going to say. Again, we've been suggesting take it off in small pieces, look at 13 weeks, look at your next quarter, keep those items, keep that look going forward. Don't drop off and say, gee whiz, I'll look at my next quarter in 8 weeks or something like that. You know, keep those things rolling forward to be able to keep your pulse on the business. We've heard terms in the past, you know, and again, I say this tongue in cheek completely, but, you know, don't let a good downturn go to waste. Now, sometimes you can look at these things and have opportunities, whether it's opportunities to, you hate to say it, but, you know, you may find a struggling business that may be one that that would fold real nicely into your current business. Look at those things. I know it's difficult to do when you've got all these other struggles and stresses, you know, going on. You know, how am I going to go out and look for an acquisition when I'm struggling with, you know, making sure my employees are here and my vendors are taken care of? Well, you're right. It's not going to be easy, but it might be something where, you know, you're looking at this whole bit from the standpoint of strategy. It could be markets. It could be things where you're able to take advantage of certain markets or certain areas where things can't be delivered by competitors, or where you can fill in space that is that's not being filled right now because of this. So, you know, the thought process is changing. I think everybody needs to have a wide open mind, clean, you know, piece of paper, and don't be afraid to talk to other people about it. Don't be afraid to talk to associates or people within your business chain and that type of stuff, because you know, I keep on seeing this thing, you know, we're all home alone. No, it's we're not alone, we're safe. One of those terms, I can't remember how it goes, but again, we're all in this together. We're not alone, and there's plenty of people out there that are glad to talk about things and to help you through these times. And you know, the fact that you're even on this Zoom at noon does show that there is a lot of support network available to people.
Yeah, we have. Well, thank you both. This is great. We have a number of questions, but I always try to have Tony ask some questions or comment. Tony?
Yeah, no, thank you, Dale, and thanks, Alan and Mike. You know, one of the things that I've heard since, I guess, day one of this crisis in the CARES Act and the PPP was that a lot of the...
You there, Tony? Oh, he froze. Okay, he froze. Well, let me ask a question while we're waiting for Tony.
For Tony to unfreeze.
To unfreeze. And now, yeah, we're having more and more problems with the internet. So one, I'm hearing more and more about bankruptcy. You know, have there been any changes to the bankruptcy law? And that is top of mind. I'm hearing so many, especially salons and others, going out of business. But thoughts about that and the tax implications?
So,
I-
you know, I'll try. I mean, to be very honest with you, I have not heard anything relative to changes in rules and laws. I mean, I think it's a little premature at this point to see how this is all going to play itself out relative to the bankruptcy courts. I mean, taxes don't necessarily play into that. You know, there are forgiveness of debt rules, and you know, there have been some precedents about, like in the 2008 crisis, they changed some of the rules relative to the foreclosure of properties and the tax implications around that. But I think you're right. I think that there's going to be, unfortunately, a tremendous amount of bankruptcies because people aren't going to have the capital to get themselves started again.
Yeah.
So, yeah.
It's
Yeah, the sad part about that is that, you know, many of the businesses that are out there, I don't want to say they're poorly capitalized, but they're not capitalized to be able to go 3 months without having their normal revenue stream. As a matter of fact, I think people are very aware of, you know, even in the retail industry, you lose a fall period that goes into the holiday season. 50-50 that you're even going to be able to open up again in January. It's just very, very tight. And it's not something that's a new phenomena. It's just the way it seems to be for a lot of the smaller retail situations.
well, their margins are slim. Their margins are slim. I mean, even a Memorial Day weekend, you miss a Memorial Day weekend, that can kill some businesses. And
Yeah.
you know, the challenge that I've said every week is, you know, big businesses and unions have money for lobbyists. You know, small businesses don't have margins for that. And that's why I think a lot of leaders around the country were just hitting the head. They didn't realize that small businesses employ more people than anybody else. So now one person had asked about the PPP tax-wise, that there's some rumors that the IRS is not going to allow you to write off some of the normal business expenses. Do you want to say something about that?
Yeah, Mike, if you don't mind, I'll address that because I saw the question and it asked what's the accounting community doing about it. And I'm in a kind of unique situation to maybe comment on that, as I serve on what's now called, I'm serving on what's called the American Institute of CPAs Council. It's a governing body, and we just actually had a call, our council meeting on Tuesday. So yes, the IRS has put out a position that said, even though the legislation on the PPP said that the forgiveness of debt would not be income, the IRS has turned around and said, yeah, but the deductions will not be allowed to be deducted, will not be tax deductible, which in effect means it's taxable. The AICPA, along with the accounting industry in general, is absolutely pushing hard back on this particular area. We think that that is not the intent of the legislation. We think it's actually sort of unfair dealing. It's like changing the rules. The whole notion here is to create relief for businesses. By doing this, you essentially reduce the relief associated with the forgiveness component by about 40%. So instead of thinking you're getting $1, you're really only getting 60 cents. And many businesses made decisions relative to keeping people employed. Remember, we don't get 100% reimbursement on employment. If you're paying somebody greater than $100,000, you're capped at $100,000. If you kept them employed, it's costing you money. Part of that was because you thought that you were not going to be taxed on this forgiveness.
Interesting.
Payroll taxes are not included. That is also going to cost you money. And so the whole notion here is they changed the rules. The IRS is attempting to change the rules. Here's what I can tell you. The AICPA, in discussions with senators and congressmen, all believe that what the IRS did was wrong. And they say that they need to legislate. They need to write a rule that says the deductions are allowed. Okay. Now, Tony, you might be able to comment on this better than I do, and I know you're mostly state-oriented, but if you think you can get a clean bill of just that through the House and the Senate in Washington, I've got a bridge to sell you because, and that's the problem here. You cannot get legislation done these days. And so I don't know personally what's going to happen. I know there's an intense lobbying effort to get in that area. And hopefully they will see the error of their ways.
Well, Tony's back. Tony, you sat there patiently. Yeah. The second you spoke, the internet.
And I got kicked off, so I'm sure I missed a lot. But the question that I was going to ask both Alan and Mike is from day one, and you guys hit it on the head about cash flow. Cash is king. And the triple P, I heard from a lot of our members that received it, said, well, they didn't really want to take it anymore because they couldn't generate the revenue, you know, to bring their people back. So here they brought their people back, and now nobody's really really doing business with one another. So I wanted to get your take that you think looking back at this, maybe Congress should have, and I get that the PPP was for paycheck protection, but do you think it would have been better served if the money was just grant money to infuse back into the economy so people could pay their payables? Because if one business gets their pay, invoices paid, and maybe I'll do business with somebody else. It seemed like all this money is in there. It got tied up paying salaries, which was important, but a lot of the companies aren't doing business with each other, and that cash flow froze. And some actually gave the PPP money back, even if it was 1% interest. They couldn't generate revenue. So I'm just curious, if you had to do it over again, would you just keep it simple and just here's a bunch of cash, pay your bills, bring your employees back, but do business with each other, because that was the key.
Yeah, let me just comment. I remember, I think one of the things that people have to understand is how quickly this thing turned around from the standpoint of the legislation. I use the cancellation of the basketball game out in Arizona as the tipping point. Once they had everybody come in and sent everybody home, when the two players tested positive, that sort of set the domino effect. Because if you recall, up to that point in time, there was conversation, and there was concern, but nothing like what happened over that 2 or 3 week period, right through, I think it was March 27th or whatever it was. It was just incredible. So I don't know whether or not Congress and everybody had the time or the opportunity to go through and really button everything up to make this a perfect law that fit every situation. I also recall that during the time in between when the CARES Act came out and when the money was being dispersed, there was a part on the AICPA where they were trying to get a process through where the money wouldn't be dispersed to the entities, to the companies, but would be dispersed through the payroll companies. So in other words, through ADP and paychecks and places like that, as a way to make sure that people continue to get paid. I took that as being the intent was to cut back on the unemployment more so than anything else. And I think what's happened is that it's turned out that possibly that's not what happened. I think the unemployment numbers continue to go, and as Dale showed you, they're just like through the roof. They're mind-boggling. There's been some, I know the AICPA also was getting in front there to see whether or not businesses had the ability to move the covered period around. So in other words, I got my money April 1st. Can I start my 8-week period sometime in June when I'm back to going? That really didn't go anywhere. So I don't know that any client that I'm working with, I don't know about you, Alan, has turned the money back because of that, because of the fact that they didn't bring everybody back to work. I mean, right now what they're doing is they made business decisions. And if the business says, bring the person back because they're available to work, they brought them back. Now that's not in every single case. There's still companies that I know that, have a receptionist that they furloughed or is not coming in, but they're still paying them because of PPP. But for the most part, if there was no work, they didn't bring the people, they didn't bring the people back right away. And that's going to be a problem because they're not going to have they'll have the available funds because they didn't spend it currently during the covered period, but they're not going to get the forgiveness. So it is somewhat of a sword there.
It's an unfair result, Tony.
Yeah, it's an unfair result.
Because if you brought employees back and you were literally shut down, it cost you money. And the whole idea here is you didn't have money to spend. And so Mike's right. You can use the loan, but you're not going to get the forgiveness unless the rules are changed.
Right.
It's unfair.
Yeah, well, that's why I guess if they had to do it over again, I don't want to dismiss the fact that paying employees is number one. But I think what they failed to understand is that cash flow dried up. People were holding on to their money, right? They didn't want to spend their money because they didn't know what was going to happen. I mean, I talked to landscapers, they're like, Tony, we're doing the work, but we know we're not going to get paid for 90 days, if ever, but what were they going to do? They had the staff, they had their workers come on in and, and I'm hearing that across all the sectors that, they're doing the work, they're trying to deal with clients. Now, whether or not they're getting paid for that work, It may take 60 days.
But Tony, that's actually a good use of the PPP because they'll get 2 months worth of payroll covered. Even if they don't collect from their customers, they'll get that. So they at least have the work. I think the bigger problem is like a retail, maybe a hair salon or an eyelash place that, you know, they don't have, they're paying people for doing nothing.
Yeah.
Or a restaurant. You drive down, whether you're driving down Route 10, Route 22, Route 46, whatever, you drive down and you look at all those businesses, they're all closed. They're all closed. And what happened there is that they couldn't even open if they wanted to and use them and spend the money on payroll if they wanted to. So yes, that's where the flaw comes in. That's where the flaw comes in.
And good question, Tony. Anything else? Any?
Good. Thank you, guys.
Well, you're part of. I'm part of the Main Street part of the governor's Restart and Recovery group, and I know Tony, you're part of the Restart group as well. And so, announcement that Tim Sullivan had to leave our meeting early because he had a special board meeting, and they were supposed to approve $50 million in money for small businesses. So the governor, I think, had announced it on Monday. So there should be some more, and I don't know if Mike Allen, you know anything about that, but you know, keep your eyes open on the websites. There will be some additional money. So that's good news.
That's interesting you said that, Dale, because again, in a lot of these cases, you know, people aren't going to come knocking on your door. You know, this is not the Girl Scouts selling cookies. So there is some diligence that people have to, you know, get up in the morning and check the sites, you know, just like we've been doing.
And early, Mike, and again, Tony had mentioned, and I'd mentioned as well. I think EDA, Tony had what, about in the first hour had 30,000 applications for the previous. I mean, it really is a crisis. And I want to go back to that whole idea of vendor terms. And so one of the folks online was saying that the big companies are saying, we're going to extend it 30 days and there's nothing you can do about it. Right. And so I don't know if there should be legislation to say that you have to pay small businesses in a certain period of time. If you're doing business in New Jersey, and I may suggest that on the committee, because that's a crisis. It's about cash flow.
Right. And the other thing, just for you, both of you who are on the committee, the incentive money that was put out by the EDA, the application was so complicated and required so much, you know, material. You've got to simplify the process. I will say the beauty of the PPP program is it was very easy to apply. And New Jersey has a reputation of regulation and making things difficult. If we can emphasize simplicity is going to be the key here. I think it'll be a huge benefit to all businesses.
Yeah. It really will. One of the other questions I have is somebody they were really scared of what was going to happen. So they drew down their credit line. They have cash. They seem to be doing okay. Should they pay it back? What do you think?
We had several clients, just about every client that I work with did draw down on their credit lines back in March. And we've gone through that same question, and some of them paid it back, some of them have not. I think what happens now is that each entity is unique from the standpoint of knowing, you know, what direction things are going. I mean, you know, we now have whatever it is, we're into May, so there's some known. There's still a lot of unknown, but we know now more now than we did back in March. So like I said, I've had a couple of clients pay it back, and the other ones look at it and say, listen, you know what? I'm looking at this as an insurance policy. If I got to pay some interest, that's fine. I also pay insurance, and I hope I never have to make a claim.
Right. And Dale, I just would add two things to that. Number one, I think there's a lot of uncertainty still, and I hate to be, you know, the scared person, but, you know, the big part of the reason the numbers are looking better is because we've all socially distanced. This disease has not gone away. And I think we're going to have to see what happens in terms of when people start getting back to normal and what that might impact businesses on. The second thing is I would caution people and pay back in their line of credit if they took a PPP loan, because the proceeds of the PPP loan are specifically to be used for certain purposes. And so if you're going to use it to pay down your line, you better make sure that you're able to demonstrate that it's not PPP money you're using to pay down the line of credit. And the second thing is you had to make the statement that you thought that there was going to be an impact from this virus, and that's why you took the money. And if if you're doing well enough to pay back your loan without the future risks that may be there, you may be contradicting your statements. So be careful.
Well, and that kind of one of the other questions is, I haven't really been impacted by COVID-19. Should I still apply for PPP?
That's an individual decision people have to make. I think the notion the decision tree that I ask clients to go through, and we did for our own firm, is we said, first of all, is there substantial risk? And I think the answer is probably yes to almost everybody. Right. The second question then would become, is there still risk? And then the other element is, do you have sufficient liquidity? Even if there's not risk, is there sufficient liquidity in your business that you would need to take that loan? If you can answer those three questions, yes, you should do it. I think if you don't apply for the money and you have a legitimate reason, you're actually, you're not acting in a fiduciary capacity for your business. Now, I don't think you should just take the money because it's there. I think if your business is a solid business, that's a whole nother thing. And there are some businesses that are thriving in this thing. What's not clear on the PPP program is once you apply for forgiveness, and let's assume that your year turns out to be pretty good, everything came out well. What are the provisions at that point in time to return that money? Right now, none exists. And so I think people are going to have to decide how they handle that. I don't believe that this program is intended to enrich people. It's to throw a lifeline to help people keep their people employed. And so, I've heard from people that said to me, well, you're in the accounting industry. You don't need this money. We do need this money. I will tell you that had we not received this PPP money, probably not on April 15th, because we had a lot of work that still needed to get done, but probably around now, we would have probably furloughed or let somewhere in the neighborhood of 15 to 25 people go, because we're anticipating that we will see somewhere in the neighborhood of about 7 to 10% drop in revenues. And that's what the PPP forgiveness represents for us, about that. So, everybody, our business is good, but our clients are suffering, so they may not be in a position to pay us. We may be doing work right now that we're not going to get paid for. And then there's obviously special projects and other work that may not come about, transactional type of stuff that we may have had in the future. So we're busy at the moment, but we don't know whether we're going to get paid. And I suspect most businesses are in that same boat right now with the risk element. So,
and let me just add something. That was one of the things that I think everybody struggled with, because at the time when the loan applications came out, the understanding is that here it is, keep the people employed, get you through these times. But then, a couple of weeks later, then all of a sudden we started hearing these rumblings about, the sign off and the certification and give it back and so on and so forth. And a lot of clients struggled with that from the standpoint of, can I make a go of it? Yeah, I can make a go of it, but am I going to furlough 10% of my staff? And that was a very, very a tough thing to do. But you look at some entities and that type of stuff. At some point in time, I think, the recipients of the PPP money are going to be, you're going to be able to see who they were, who took the money and that type of stuff. Because I think that came into play too, because you had to be prepared at a point in time to know that people are going to know you took the money. And for some businesses, who knows what ABC company does? Who knows what XYZ? But if you're in a law firm and that type of stuff, a prominent law firm, I think you got to consider the fact that there may be some backlash. Same thing with accounting firms. Same thing with some of these real visible companies that are out there that are doing that are probably doing very, very good business. You have to understand that. I do work with a client, and it was kind of incredible when we were going through this thing. The business is doing very, very well. Part of it is because of the pandemic and the product that they produce. And she said right off the bat, the bank was pushing for it. The bank was pushing for it. He goes, I'm not taking it. I don't need it. I don't need to be enriched in a way that it wasn't meant to be. I'm keeping my people employed. Good. She could have taken it. She could have taken it. She could have gotten all those wages forgiven. But you know what? That wasn't in her DNA.
Right. Well, a couple of things I'm going to build on. Courtney Villani, who's one of our regular, she's the CEO of a 100-year-old bus company. And so she and I have been talking about some of the challenges.
But she's not driving 100-year-old buses, right?
No.
There's no horse and wagon, right?
Brand new buses. She's not driving anything right now, but brand new buses. But she made a point, which I heard from the chairman of the Federal Reserve on 60 Minutes, which was good. And now whether they're going to do something about it. But he said that, the longer these businesses go, these businesses are being closed and they're not coming back. The same thing, the longer people are unemployed, they're not going to find jobs. And so it's really critical. And it's interesting to hear a government person saying that we've got to do stuff now. We really have to, and that's what we've been pushing. I asked that today at our call for the Restart Recovery Commission. But I don't know, you as some thoughts, and I'll put this out there. I'm on the commission. Our websites, our emails, rothman@fdu.edu. I want your ideas. Email me your ideas and we'll get them right to the governor. Do you have any thoughts? If you folks are brilliant at strategy, tax strategy, what should we be saying if we were sitting with the governor now? And we've invited the governor on this, and there are people who are thinking about coming to this one Friday. What should we say? What should Tony and I, as we say, what do you think they should say? We should say.
Alan, you want to go first?
Sure. I would be saying exactly, Tony knows this. He's heard this line from me before. We need to do everything we can to make New Jersey not a better place to do business, but the best place to do business. We need to loosen up regulations. We need to make it easier for people to do businesses in the state. We need to find some industries that really can thrive in this state, whether it's green technologies or a revamping of the pharmaceutical areas. We need to bring jobs to New Jersey. What we don't need to do is tax people. I know the tendency here is our revenues are going to be down. Let's go to the well and let's get people. But with this outward migration, the people who pay the taxes are the ones who are most mobile, and that will work against us. So I feel very strongly that revenues need to be, we need to get revenues up by driving business, not by increasing taxes. And we need to make it an easier place with which to do business. This is an opportunity, in my view, to completely transform, to pivot, is a word that everybody does, or do a paradigm shift in the way that New Jersey is recognized in the business community. And that's the way I want to go. And I'm not making this as a political statement, but just as an observation, I'm not optimistic about our current governor's ability to do that, because he does have a very progressive agenda, which I don't fault in a healthy economy, but you can't do all that when you're suffering. So that's the advice that I would have. And I know you guys are hearing that from everybody, so it's not unique.
The great comment. And again, we want to hear from those folks out there. So a couple things. One of the challenges that a lot of businesses are having is that with some of the unemployment subsidies and the federal kick in for that, there are a lot of employees that don't want to work, that don't want to come back to work. There are a lot of employees that are looking for work. What are you seeing from the employee standpoint, from taxes and other things? What are some of your clients dealing with when it comes to those kinds of issues?
Well, we are seeing struggles with clients getting people to come back to work. It started when the crisis started, where you look back and you see that federal kick-in as far as the unemployment, very, very well intended, but I think in some regards it had some consequences that people just didn't see at the time. What's best. I think the combination, though, the combination of having issues with childcare also lend a hand to that. There are a lot of households where there is no alternative to having somebody watch your children, and a parent does have to stay home. Not regrettably, but the sheer fact of the matter is that not everybody can work at home. That's one of the things that is driving me gets me a little bit upset, because I keep on hearing from certain people, this is great. I'm working from home. I can't beat it. I was on the phone this morning with somebody, and he said exactly that. He goes, I'm never going back to my office. This is fantastic. It works for some people, but for the most of the population, it does not work for. So it is going to be very difficult, at least temporarily, to get these people, a lot of people to come back to work. I'm hoping that, the childcare situation gets fixed very quickly, because I don't have a statistic, but I gotta believe that 10 to 20% of the people that are working have some sense of, some child or elder care issues that they have to deal with. So until we can get these things opened up, I think it's going to be a continued problem.
Yeah, Dale. The only thing I would say, Dale, is, you know, one of the things, and you're on the Main Street, I'm on the manufacturing supply chain. What we're urging the governor to do, and he hasn't done yet, is give us dates, right? I mean, people need to plan. You know, I can't tell you how many of our members have said to me, you know, I can't just start, you know, right away, you know, a day later, I got to plan for these things. I got to, who's coming back, who's not. And there's never a good time for a crisis, but think about when this crisis hit during the spring. And a lot of our economy is based on seasonal, right? It's seasonal. I've talked to the movers in the moving industry. They're down 30, 40, 50% because people aren't moving. You think about the landscaping industry, right? This is their time to shine. Think about the tourism side down the shore. You know, if we lose the month of June, then half their season is gone, because a lot of their money would have been made in May and June. So, you know, I know Dale and I are on these task forces, and we tell the governor all the time, give us dates. I mean, you know, it's important. And I'm not trying to dismiss the healthcare side of it, you know, and luckily that everything is on a downward trend. All we're saying is start to plan ahead so people could reopen and people could plan. And right now, that's the most important thing, is give us dates.
Yeah. The, you know, one of the things that I heard on the national news is that it's not passed as quickly on surfaces as people thought, and that it's actually really more face to face. And so that's where, you know, the mask, if you're not 6 feet, you have a mask on, and others. So there are ways to work around that. We can't go before talking about taxes, the extension of the tax filing, and what advice are you given around individual and business taxes with the changes?
Well, I'll take that. Again, the change that you're talking, I mean, there's two separate things here. One piece is, you know, the deferral piece. In other words, I didn't have to write out a check on April 15th, but now on July 15th, at least for federal purposes, I'm writing three. I'm writing a check for what I owed last year, and I'm writing a check for my first and second installments for the 2020 taxes. But, you know, what we've been doing here is, you know, in many cases, what you do is you base your 2020 estimates on what you paid in 2019. Well, that's certainly not going to happen. I think people have to do a little bit of due diligence in that regard and understand that 2020 is not going to be what 2019 was. So, you know, that's been a small adjustment. We've already gone out and made some alterations to 2018 tax filings. As I mentioned before, there was it was a correction that came through the tax piece. That was a problem from the 2017 Act for leasehold improvement property. So we've already gone out and been amending old 18 tax returns and getting money back into clients' hands. I got returns sitting right over there, $30,000 going back for a client because of that, because we went back and recalculated the depreciation. So we're doing things like that. We're certainly following up with clients for the deferral portion of the Social Security, the tax, the 6.2%, which if you're not in the PPP program, goes right through December 31st. If you are, it goes to the point where you hand in your application to the bank. So, you know, those are all things that we're working with. I think it's a matter of just keeping your hand on the wheel and understanding, you know, the direction that you're going with this stuff, and staying on top of these things, because, you know, Alan mentioned a tax rate of 40% or thereabouts sometimes when you get all done, and he's not wrong. So again, that becomes a major player in how you can work cash flow going forward. So if you can manage your taxes better, you know, that is a source of cash. And if you don't manage it real well, then it's a use of cash, and that's not where you want your money to go.
But so the final message is take advantage of your advisors, talk to people, have a relationship with the banker, and, you know, and also, as I tell business, you can't be by yourself. Talk to your legislature. You've got to be aggressive now. You got to be aggressive, and that could be the difference between staying open and staying alive. And we always like to end right on time. And before I go to the two of you, Mike and Alan, Courtney asked about the furlough bill. Tony, do you know anything about this furlough bill, A42? If not, we'll get back to it.
Yeah, she's talking about Senate President Sweeney had a bill about furloughing state employees, local employees, county employees. I think it's on the governor's desk.
Okay. Okay.
I'm not
Yeah,
sure.
that was just announced yesterday, wasn't it? I think.
Yeah. Well, this was a bill that went through last week, I think.
Right.
And I'm not sure. I mean, the governor has 45 days to sign it, so I'm not sure what he's going to do.
Yeah, but but again, if I read it correctly, the way it's worked, the bill actually folds it in so that our state employees will be eligible for unemployment. So I think the way it's worded and the way it's going to work is that they'll be furloughed, I think 3 days. So they'll basically work 40% of the time, which lets them participate in the unemployment program.
Right.
Yeah, my gut tells me real quick that, they're going to borrow the $9 billion, they're going to bond it because the speaker already came out in favor of it. Obviously, the governor thought the HEROES Act would pass in Congress, and maybe get some federal bailout. So I think that's how they fill the gap. I mean, that was the Senate president's intention on that bill.
Right.
Try to fill the gap, the budget deficit.
Well, I think we're at time. We try to end on time to be sensitive. You folks were amazing as always. With Alan and Michael, just thank you very much. That's the worst thing about Zoom. We can't have the formal clapping, but yeah.
We've been doing this.
Thank you. It was excellent. And so take care. Good luck, everyone. Have a happy holiday weekend. Support small and family businesses if you can. And
Thank
Tony,
you.
thank you so much.
Dale.
Okay.
Thanks,
Take care.
Thanks, Tony. Be well, everybody.
Be well, everybody.